Alright, welcome to Chapter 2 in Accounting 1. In this chapter we will be analyzing transactions into debits and credits parts. Our first section in Chapter 2 is on pages 28 to 30. Be sure to read those if you missed class. And this is going to be covering using T accounts. So as a refresher, this is our accounting equation. Our assets equal liabilities plus owner's equity. And you could see that as one big giant T, where the left side must always equal the right side in our accounting equation. So our assets must equal the total of liabilities plus owner's equity. So we're going to be working with T accounts. Now an account is just a record summarizing all the information pertaining to a single item in the accounting equation. Some popular accounts we've used would be cash, the capital account, supplies, and such. Now we have our debits and our credits of our T account. Our T account is an accounting device used to analyze transactions, and you can see that at the bottom of the screen. The left side is always going to be a debit, and the right side is always going to be a credit. It doesn't matter if it's an asset, liabilities, or owner's equity. Left side of the T account is a debit, right side of the T account is a credit. Now they each have Latin words which are in parentheses above there, and so you're going to see the abbreviation DR for debit and CR for credit. Now each side has a normal balance. Each account has a normal balance, and that is the side the account that is increased when it is on that side. So for example, any asset, cash, supplies, accounts receivable, prepaid insurance, all of our assets are going to be increased with a debit. That is their normal balance side. The normal balance side is the one that's going to be increased. So for example, if we received cash, cash would be increasing, so it's going to be a debit. Now liabilities and owner's capital account, both of those have a normal credit balance side, so they are increased with a credit. So if an owner were to invest $1,000 into a business, the owner's capital account would receive a credit because that's the normal balance side where it will be increasing from them. So here we have our examples on here of what we're going to be doing today. Any asset, remember our debits and credits are going to be the same no matter what, but our assets are increased with a debit. Our liabilities are increased with a credit, and owner's capital account is increased with a credit as well too. So, simple enough today. There's going to be a few accounts. You'll have to work on memorizing them, but always make sure your accounting equation is equal, which they have their giant red T on here for that. Our work together 2-1 is on page 31. It says write the answers to the following problems in your working papers. They give you a list of 7 different accounts on there. And it says for each of the accounts complete the following. We need to prepare a T account, label the debit and credit sides, and then label each side of the T account using the following labels: normal balance, increase, or decrease. So our first one is cash. So on your first T account, you need to go ahead and write the account title cash on top of it, and then go ahead and write debit and credit on their respective sides. Debits will always be on the left, credits on the right. So with cash, we also need to write what our normal balance is. Cash is an asset. All of our assets are increased with debits, so we need to write normal balance on the debit side, the left side. And the normal balance side is always the one that will be increased. And instead of writing increase, I'm just going to draw arrows. So if cash was ever a credit, if we paid cash, cash would then be a credit. Alright, our next one we have on here, I'm going to move my accounts out of the way in preparation, or my arrows. Our next account is accounts receivable, Christine Kelly. So you need to go ahead on top of your T account here, put in accounts receivable, and you should get in the practice of writing the full account title on top. Don't abbreviate yet. So accounts receivable. Accounts receivable is an asset, and assets are increased with a debit. So go ahead and write normal balance underneath your debit. Make sure you put debits and credits in the right place for all of these. And then it's going to be increased with a debit, decreased with a credit. Now, supplies and prepaid insurance, those are also assets as well too. So they're going to be the exact same as this, but you just need to go ahead and change your account title on top of your T account, since those are all assets. Now on the right side in our textbook we have on here, we also have two payables. So I'm going to do one since they will both be the same on here. So our first payable that we have is accounts payable Miller Supplies. Now make sure you go ahead and put in your debit and credit. You write that down. It'll still be the same. Accounts payable, those are a liability. Now liabilities are increased with a credit. So our normal balance is a credit. And then we need to draw an up arrow, or you can write the word increase if you would like to. And then they're decreased by a debit. So same thing for the other account payable, and then also the same thing for Jeff Dixon Capital. So our assets, they're all increased with a debit. Our liabilities in our capital account, those are increased with a credit, and that will be their normal balance side. So your homework for today is on page 46, application problem 2-1. This one, same thing, but you're not using T accounts. They give you a table to go ahead and use instead. And I believe cash may be done for you. You need to go ahead and write the account, which is cash. The account classification, it'd either be an asset, liability, or owner's equity. And then go ahead and check the account's normal balance if that's debit or a credit. And the increase side is always going to be the same as the normal balance side. So if the credit is a normal balance, it's going to increase with that. Go ahead and write your name on it and submit it. Turn it in when you are done, and I will see you tomorrow.